Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Now we are recording this before the Fed meeting, but we're not going to talk about the Fed, and we're going to try to look past this daily noise that we are undoubtedly going to get through the rest of this week, maybe even early on into next week. Starting with gold, Jordan, look, gold is pretty much sitting right around this 1675 level, which a lot of technicians were watching because this level has been tested a number of times throughout the last about year now as more or less a key support level. If broken, man, oh man, it brings in some 1500s, even some $1,400 calls for the precious metal. Jordan, what's your takeaway from gold more or less just treading water right at this key support level?
Yeah, well, I mean, you could say that gold has broken down, and I did say that in editorial. At least it's in the process of breaking down, because if you look at the daily closes and the monthly closes, you do have a breakdown. What's really interesting is that's not confirmed by silver or the gold stocks at this point. So gold, since the beginning of the month, has broken down. It's made a lower low, but you don't have that lower low in the miners or silver. So that's one thing to think about. I mean, we know that sentiment in silver, the short interest on SLV is at an all-time high. The net spec position a couple weeks ago in silver was basically at its second most bullish point ever. The stock market made a lower low as well, but that didn't affect, or at least not yet, didn't affect the miners. And plus, you have the Fed here, which naturally could set up some kind of a bounce, not just in precious metals, but also in the stock market. So I think that it's a really, really interesting point, just because technically you can look at gold and say, yeah, this is breaking down. But if you look at the other things that are going on in the market, you do have the setup here for a potential short-term rally. So I'm watching the Fed rhetoric, which I rarely do, or at least, the reaction to it, because I want to see if there's any slight turn in what they're talking about. Now they had to be really tough in the summer because we were getting a summer rally, financial conditions eased, but now, so we have the September meeting, then you have the elections coming up in November, and I don't know if the meeting is right before or right after. I think it's literally right around the same time, but it wouldn't surprise me if at some point very soon, potentially, you start to see the Fed ease off their tight rhetoric a little bit, because after this meeting, they're going to be at 3.25%. Now the market, Fed funds futures was showing, I think, a peak rate of around 4.5% in March. So in the last couple weeks, you've gotten the market has kind of moved from 4% to 4.5% as far as the peak rate. So I just think there's a really high bar for the Fed to actually get to 4.5% in the next 6 months. And at the same time, look at the Atlanta Fed GDP for Q3. A couple months ago, that was expected to be over 2% growth. Now it's down to 0.3% growth. So I think that you have all these factors, plus the majority is positioned for, if you look at the bond market as well, they're positioned for a tight Fed. And I don't think we're pretty close to the end of the cycle. If it's 4.2, if it's 4%, we're still really close to the end of the tightening cycle. So I think the setup here is really interesting for for the potential for some kind of a rally. And if that's the case, then in the next 10 days, I'd want to see how well gold could perform. And if it's able to close the month and quarter above 1700, then you potentially could have a false breakdown. So that's just one scenario I'm thinking about here.
Well, Jordan, I think you pointed out something interesting, and that is that there hasn't been the confirmation from the rest of the precious metal sector with this recent move down lower in gold. And in particular, silver is of interest to a lot of people because it had dove down into the mid 1700s. And then, talk about the knives coming out. Everybody started talking about it dropping a couple more bucks, and that, the move was over, and that it was over for a while, and that it wouldn't see 20 again for a long time. And it quickly rallied back up into the mid 1900s. Now, it has not gotten above the key resistance up in the 20, 21. I'd love to see where you think the resistance is that it needs to break. but it has held up so much better than gold, and the mining stocks really haven't fallen out of bed here. So is it possible that silver and the mining stocks actually lead gold higher this time?
Yeah, I mean, it is possible, especially if this non-confirmation continues. I don't know. I mean, the other scenario I talked about, the bullish scenario for precious metals where they could stage a rally here after the Fed. And I'm not just talking about a one-day rally, something where they could rally for a week or two into the end of the month. The other scenario is maybe we get a 1 or 2 day rally and then gold keeps rolling over. But in that scenario where gold rolls over and it goes towards 1600, if you look at a trend line from the 2021 lows and you connect that up to the low, I think in January 22, that trend line break has a measured downside target, I believe, of around 1600 or 1580. So if gold would continue down towards that target, but at the same time you see silver and the miners continue to hold up and they don't make a lower low as gold is approaching 1600, that would really strengthen the non-confirmation argument that there could be something significant at hand. And at the same time, obviously, Fed policy matters, because if you see these things happening at the same time where, maybe the Fed starts to soften its rhetoric a little bit, maybe some economic data comes in that's more negative, then the Fed funds futures starts, instead of 4.5% is the peak, then they say 4% in January is the peak, or 4% in December. Those types of things I think could support, a major low in the market. And also if we get those non-confirmations in silver and the stocks. So there's a lot of balls in the air, but those are the things that I will be watching, if gold trends lower. But I do think that's possible, that these non-confirmations could be significant.
So, Jordan, when you mentioned gold and this monthly close that's coming up at the tail end of next week, you mentioned you would be encouraged if it closed over 1700. That would still be another month where gold was in the red. So that would make 6 months in a row. Break down again why 1700 would be encouraging, because I think a lot of gold bugs saying 1700, that's nothing even close to what they were expecting in terms of, hey, they were expecting $2,000+ gold.
Well, I'm not keen on levels right now with respect to, what monthly close gold would need to have to negate all the bearishness. I think the monthly low is, I think if we go back to the early 2021 monthly low, I think it's around 1715. So if we could perhaps see gold register a close above that low, then you could look at the market and say, well, we could still have a potential black candle even if it closes at 1720 or 1715. That would be a bullish hammer. But yeah, we'd still have 6 black candles, so that could be another reason to think that we could have a good rebound here. It's also very similar if you look at what happened in 2018. I'm looking at it. I think there were 6 black candles before that low in August. So that's definitely the fact that you have 6 black candles in a row. That definitely speaks to the potential to have some kind of a rebound. So getting back to the level, yeah, I would say above 1715, because if you're able to close above that, then the bulls could say, look, we've come down 5-6 months in a row here, yet we weren't able to make a new low. It looked like we were going to make a new monthly low, but then that was negated, and then the market closed above the actual monthly low in early 2021. That would be significant. So, we got, 9 or 10 days left. So, we'll see what happens, but that's definitely a scenario to keep in mind.
Well, Jordan, since we're kind of looking at things without the daily noise here, if we zoom back, a lot of people would have postulated that we were in a bull market, at least in nominal terms, from the end of 2015 when gold bottomed at 1045 through, let's say, 2020. And some would have said that continued into earlier this year where we got above 2000 again. But a lot of people, because the sentiment is so bad now, have shifted to saying, we're clearly in a bear market. Look at what's happened. Gold probably double topped over 2000 in 2020 and 2022, and we could be heading for much lower lows. You've maintained that we've never really been in a real bull market yet compared to other asset classes like the stock market and bonds. So I guess, how would you make sense of this whole debate that's going on in the precious metals community? Are we still in a bull market? Have we not started a bull market? Are we in a bear market? Where do you stand on that discussion?
Yeah, well, I mean, it's clear that from 2018 to 2020, that was a cyclical bull market. I mean, that was a 2-year cyclical bull market. I think, if we're looking at secular trends, it's obvious that gold is not in a secular bull market yet, because in the last 5 or 6 years, gold has been unable to, I mean, it did make a new high a couple years ago, but, it's basically lost that. It's been correcting for over 2 years now. So in a secular bull market, gold would have made that high, it'd have a correction, and then it'd keep running. I mean, it's possible it could do that, but it's still, I mean, it's had too long of a correction at this point. And at the same time, you look at what's happened in silver and the mining stocks, how, they're back at, 2016 or 2015 or 2014 levels, whatever it is. So you look at those two, that just confirms that, gold hasn't been in a secular bull market. I mean, you look at what the stock market has done. Stock market has made higher highs. So, gold and precious metals have had some really, really good moves here and there over the last 5 or 6 years, but they haven't consistently made new highs. That's what you get when you're in a real secular bull market, like we had in the 1970s and the 2000s. And those things happened when the stock market was in a secular bear. So if you look at the ratios, look at gold against the S&P, look at the gold stocks and silver against the S&P, over the last 5 or 6 years, those things have made lower lows. They haven't made higher highs. So all of those things tell you that from a bird's eye view, we're not in a secular bull market yet for precious metals. I mean, and that's been a big problem for the mining stocks in silver. But the other thing is, if we're looking at the S&P 500, my trigger for that is the S&P breaking below the 40-month moving average. Because if we're looking historically over the last 100 years, during secular bull markets, for the most part, the S&P holds above the 40-month moving average. That acts as support during secular bull markets. And so if you look at what happened after it broke that in, I believe, 1969, 2000, 1929, it broke below that, that ushered in a new secular bear market. So I think that's what's going to happen, sometime in the next couple months or 4, 5, 6 months. And that's going to lead to gold going into a real new secular bull market where over the years ahead, it's going to make new highs and then higher highs subsequently. And it's been unable to do that in the last 5 or 6 years. Now, with respect to where we are here and now in the interim, I mean, I don't know. I mean, it's semantics to me. I mean, it's a correction. You could say it's a bear market. Doesn't really matter to me. I mean, it's possible looking at, the technicals of gold. It has broken down and it could potentially have at least another $100 an ounce of downside if it doesn't reverse course here and negate the false breakdown in the next 10 days. And so that could pull down silver and the mining stocks to some degree, potentially. But I do think we're getting closer to a major turn just because the fundamentals are going to start turning bullish when the Fed has to stop hiking, when there's increasing worries about a recession. The Fed's going to be above 3%. Then the market's going to start to think the Fed's done. They could have to cut rates at some point. So I like the setup that's developing. And again, it just comes down to the stock market. I mean, if it makes lower lows, falls below that 40-month moving average, that's the trigger for me that we're going to be in a new secular bear market. And by the way, there's been people like Stan Druckenmiller, I just think, said the same thing. They didn't say secular bear market, but he said, we could be coming into a period that's similar to the 65 to 82 period. So a lot of people who are much, much smarter than me have started to make that point.
Yeah, fact of the matter is, you look at that gold chart, it's not pretty. Whether you want to call it a bear market, just a correction in a bull market, fact of the matter is, people aren't overly excited in the sector because they're not making money, but they're not making money in a lot of other sectors. And overall, there still are a lot of companies in this sector that are continuing to struggle. And that is where a lot of investors do look to make some good gains in the sector outside of simply the metal price. Look, we're going to get some noise today after the Fed statement and press conference, and through the end of this month. Again, though, it's just not looking like a very positive chart for gold in general, but hey, couple bright shining lights that we can hang our hats on saying, well, it's not just fully breaking down, at least right now. Jordan, thank you as always for your time. We'll chat again next week. Have a great rest of your week.